Tech is in focus this week as we're getting a quarterly report cards from so many big-name tech firms. After the bell, Alphabet reported earnings that beat expectations in a big way. The stock now soaring, up about 10%. Still to come, though, are reports from Meta, Qualcomm, and Amazon. And as investors refocus their attention on earnings, broader markets have risen, with the NASDAQ 100 now up more than 7%. That's just in the last 3 sessions. So is the tech rout over? I mean, it's just we go from one extreme to the other. Joining us right now is Gunjan Banerjee. She is markets reporter at the Wall Street Journal's Money and Investing team, as well as a CNBC contributor. Also, Gregory Branch is here, managing partner at Veritas Financial Group. He's also a CNBC contributor. Gunjan Banerjee. I'm curious how you think the investor class has shifted. Is it like that, like a light switch? This Google news comes out and everybody says it's over. That doesn't make sense to me either.
You know, I think you put it the right way. It's really one extreme to another. We saw such a violent rotation into, banks, financials companies, energy companies at the start of the year in January. It was so aggressive. But, tech earnings come around. And I think the bottom line is these companies are making gobs of money. One stat in the Journal last night really stuck out to me, and it was that Alphabet's annual profits rose by, I think it was $36 billion in 2021. That's more than the profits of Visa and Goldman Sachs combined. So I think for all those investors, positioning for the shift into cyclicals, it makes you pause for a second.
Greg, I mean, is this a sea change? Really? It just seems so crazy to me because for the last 3 weeks, we talked about how earnings almost didn't matter, frankly, and that this was a Fed story and a re-rating of multiples story.
Yeah, well, earnings have always mattered, and only some of the tech companies are making gobs of money. What I think you'll see as we get off of this wave of spectacular earnings and the tide lifting all boats is that investors will start to focus on the boats that actually should rise, because we are in an in a rising interest rate environment. We know that does hurt unprofitable growth companies that need to borrow, growth companies whose future growth is somewhat speculative. But the Googles and the Microsofts and the Adobes and the AMDs of the world are not that. They are free cash flow positive. They're putting up spectacular growth numbers as they have over the last few quarters. They're giving us margin expansion in an environment where that's extremely difficult. And so we will separate the wheat from the chaff. And I think investors will start to recognize that once this relief rally has passed, and we'll see breadth narrow in this tech trade.
Hey, Greg, specifically on Alphabet, because we got the stock up on the screen right now. It's up about 10%. In large part, it's not just the earnings themselves, but it's the stock split. And it's not just the stock split, but in this case, it's speculation that the stock split is going to put Google, or now Alphabet, into the Dow. Is that worthy speculation?
So there's another component as well, Andrew. I think it is worthy. But what's also going to happen is that decreasing the actual visible stock price makes the purchase more palatable to those who don't have the institutional pockets. And so will there be an increased demand for this? Yes. Is it fundamentally driven? No. It's psychologically driven. It makes it, quote unquote, more affordable in the eyes of some. But as you know, I've pointed out Google as one of the winners in this environment for a long time. And so it is enjoying some fundamental and secular tailwinds here. It's given us a lot of multiple expansion, even though it didn't do it in this quarter, given some predictable rehiring and HR costs. But it still grew in its key segments over 40%. Even YouTube, which some people quibbled with, produced more advertising than Netflix. And so it has fundamental reasons why it's going to prove to be a safe haven as it continues to power through and crush these quarters.
Shepard Smith here. Thanks for watching CNBC on YouTube.